Good evening, everyone. Thanks for coming tonight. This probably couldn't be any more different than the last two presentations you just heard. I don't know a thing about biotech, I'll be really honest, but I'll tell you a bit about gold and why this is exciting. And I just think it's really interesting to hear all these different presentations because there are so many different opportunities for investors. Let me take you through over the next 20 minutes a bit about Shanta. I'll tell you why I think it's exciting. First, I'll take you through a bit about the team, what we've done, our history, and then again, why you should think about Shanta if you're interested in gold at all. Myself, I'm Eric Zurrin. I'm the CEO of the company. We're AIM listed. We've been AIM listed for the last 15 years. We've been in production now for 7. Over that time, we've generated £500 million of revenue. This is a real company. We have 750 employees. We've invested $250 million into the ground. Here's a picture of our plant. This is in southwestern Tanzania. And it's exciting. We're in probably one of the best countries in the world if you're interested in gold. So it's one to keep your eye on. Now, as I mentioned, I'll take you through a bit about the team, a bit on Shanta if you don't know anything about it, a little bit about what we've been up to for the last 2 years, and then again, what the value arguments are. Myself, I'm Canadian. I've been the CEO of Shanta for just over 2 years. Over that time, you'll see we've had a pretty interesting transformation from where we were this time in 2017. My own background, I started with a number of the investment banks. I spent a number of years in London with UBS Investment Bank, covering the Middle Eastern and African mining groups. And then I went off to Asia. I spent 3 years living in Mongolia, Outer Mongolia. I was based in Ulaanbaatar, working for a private equity fund, running one of their portfolio companies. I got called back to go to Africa back in 2013. So I spent some time back and forth through Tanzania. And then was previously the CFO of Shanta for a short amount of time, and then was upgraded to the current position as CEO. My longtime colleague, Luke, he's actually not in the crowd today, but we've been working together for the better part of, I think it's 12 years now. So he was at UBS as well, and really good relationship together. Well, you'll see a bit about Shanta as a gold company and as a mining company, very unusual. 750 employees. I think we have 8 expats is the number. So I mean, the entire place is run by highly skilled Africans, and I'll show you the results of how that's gone. As I said, we're quoted on the AIM exchange. Unbelievably, our market cap today is £60 million, and we generate £45 million a year of cash flow. I mean, it's incredible. So I'm a shareholder. I accumulate shares as part of my pay. I'm taking that decision consciously. So, I guess effectively every month I'm buying more and more shares. These will appreciate it at some point. I'll tell you why. And as a company, we're largely an underground gold producer, very high grade, low cost is in our DNA. We're owned by some of the biggest, some well-known shareholders in London. So Odey Asset Management is a 24% shareholder. Majetti is 9, River Mercantile, I think is 7, Sustainable Capital. These are big institutional type investors, 12%. They see the value. Last year we produced 82,000 ounces of gold. So that's about 100 million pounds of turnover. And we've done so for the better part of now 7 years. So this is it's a real company. We're exclusively in Tanzania. It's where we've been for the last 16 years. The graph here on the right shows the gold production we've done. We've accomplished over that period. Again, roughly 80 to 85,000 ounces of gold per year. So at the current gold price of, call it $1,450 per ounce, that's roughly about $120 million per year of revenue. As I said, we have just under 2 million ounces of gold in the ground. These are reserves and resources. 2 projects in Tanzania. $250 million invested in the country over that period. And we're in this in this period now as a company in this free cash flow harvesting time. It's really exciting. I'm not just saying that, it really is, because the capital's invested, the debt has nearly come off the balance sheet. I'll show you some graphs. And it's now time to start rewarding the shareholders, including myself. So it's pretty exciting. Now, a bit about Tanzania, our home. It's in East Africa. It's a former British colony. Independence gained in 1961. So there's been industrial scale gold mining in the country for the better part of about 100 years. So first the Germans, then the British, and then you've had some of the bigger gold mining companies in the world come through. So currently, there's 3 gold companies in country. There's ourselves as number 3. There's Anglo Gold, which is a $10 billion South African or African global gold producer. And then there's Barrick Gold, which is a $40 billion company. So there's 3 of us in country. I know them very well. And there's a reason why they're there, because it's a pretty well-endowed country if you're looking for gold. And I'll take you through some charts. I think there's been well over 20 million ounces of gold produced in the country. We're in the southwestern part of Tanzania, and our peers are in the northern part in the Lake Victoria region. But we're in what's called the Lupa gold fields, which again was explored and had production from the colonials. Now, the reason why the gold endowment is so important when you look at a country is because you can't change what's in the ground. So, and I'll put this in context if you're not so familiar with grade. Now, the way to measure a good project from a bad project or a poor project is by grade. So literally grams per ton. So every time you take a ton out of the ground, you measure how much gold you get. Now, some parts of the world have very good grades, like Tanzania. Some parts of the world don't. Now, if you want to produce the same amount of gold, it just means you're going to have to take more tons. And what that really means is it's less profitable. So let me give you an example here. So if the global average is 1.15 grams per ton, so you go and you scoop out a ton of ore, and in that ton, it's 1.15 grams, you basically get $40 of gold in that 1 ton. So all that effort to get $40 of gold. If you then take what our resources are, 2.9 grams per ton, that works out to about $135 per ton. Every ton of ore you take out, you get $135 of gold. Now, where we're actually mining at 4.25 grams per ton, is what we put through our plant, that works out to $200 per ton. So it's a better part of about 4 times better than the average. Now, the reason I say this is grade is king. It is. I used this example 2 weeks ago. It's like fishing. If you're going to go fishing, and you can choose what you're going to fish for, you might as well go for the king crab as opposed to the cod. Because if you get a ton of king crab, you're going to be far better off than if you get a ton of cod. Now, it's not that dissimilar in gold. You always want to go for the best grades, all things being equal. So what that really means is the better the grades, the more robust the project, more profitable, the lower cost, and ultimately the more cash you generate. Now for us, here's the example of the last couple of years, the amount of cash we've generated. So for the last 12 months to the middle of this year, June 2019, we generated $46 million of EBITDA. Last year, audited accounts, $46 million of EBITDA. Now these were at gold prices of about $1,250 to $1,300 per ounce. The gold price today is about $1,450 per ounce. So you're fully exposed to the gold price. And and as I said, at this gold price, that cash flow would be about $60 million of EBITDA at the current gold price. So remember, our market cap is only 60 million pounds. I mean, for me, it's just incredible, the valuation arguments. Obviously, I won't go into gold, and you have to take your own view on why invest in gold. But I mean, the headline for me is that there's $17 trillion worth of negative interest-bearing debt. So people are paying, $17 trillion around the world. You have to pay for someone to take your money. It just doesn't. I mean, eventually this will all come. There will be a breakdown of the currencies, and I don't know when. I'm not that much of a gold bug, but it seems like gold's not a bad place to be. Anyway, that being said, you have to then choose which gold companies you want to back, and I think this is a pretty good one. Now, what have we been doing with all this cash? Because I get the question all the time. Great, Eric, you produce all this cash, well done. Where does it all go? Now, the first number I gave you was $250 million. You saw that shiny plant on the front page of the presentation. That took a lot of cash. So in 2016, the company, my predecessor, spent more than he actually made in cash flow. Fine. And then there was this addiction to debt that we inherited 2 years ago. And we've been busy repaying that. Now, what I can report is in the next period, and sometime in mid-2020, so 6-7 months away, that net debt will be gone. So we'll have more cash than we'll have debt. And I told someone yesterday, it's literally melting off the balance sheet at these gold prices. It's good news. We're controlling the spending. We're repaying the debt because enough of debt in commodity price or cyclical type of companies. And then eventually, when there's no debt and you're generating all this cash flow, the beneficiaries are the shareholders, which is where we want to get to. And we're not far off. I mean, the light is at the end of the tunnel. So the balance sheet is the best it's ever been as a gold-producing company in Shanta's life. We will have a net cash balance sometime next year, probably around mid-next year. We'll report another net debt improvement at the end of this year. Now, I mean, it's in terms of comparing this to kind of biotech, it's not as explosive, but it sure is, I think it's pretty interesting because it's very cash generative. And then ultimately, if the shareholders, if the market doesn't appreciate it, then the cash starts to return to the shareholders in the form of dividends, including myself because I'm a shareholder. That's what I want. Now, this takes you back. This is 2 years ago since we took over. We took over in Luke and I in August 2017. So this thing is 24 months. And the market's appreciating what we've been up to. And you can imagine now, if our market cap's only 60 million pounds now, what was it back in 2017? I think it was like in the 20 million or 25 million pounds. It was ridiculous in terms of valuation. But there's some reasons for that. Tanzania was going through a rocky patch and Shanta had too much debt. But the market's taking notice. So that if you break down this chart, we're the blue line at the top there. If you break it down into three kind of tiers, the first part was reorganizing the business. We spent, I was living in Tanzania for the better part of a year full time, left the family behind, and it was basically just cutting costs everywhere. I mean, the whole place was just full of consultants, expats, everyone building bridges. I mean, it was out of control. So we went in there, we took about $100 an ounce out of the cost structure. So call it kind of $8-9 million a year on a recurring basis. And we brought the business back to what it should do, is just generate a lot of cash. Second part of the graph, if you just kind of break it down to three tiers, was basically starting to fix the balance sheet, start to repay that debt. And this was in a gold environment, $1,200 an ounce. And then the third part, and again, this is now why Shanta starts to get exciting, is the growth. So we've started drilling again, and I'll take you through why that's exciting. But the market's starting to kind of wake up to the drilling potential and the growth. Now, where to from here? Why there's thousands and thousands and thousands of investments you guys can make as a retailer or a private investor. Why would you consider Shanta? Well, there's three good reasons. I mean, the first one here is really around exploration of mine life. And I'll give you some very concrete examples of what I'm talking about. The second is we have this VAT refund due from the government, which is about 30% of a market cap. I'll take you through that. And then we have a second project called Singida. That's the third pillar. The first one really is by far the kind of, this is where you're going to get your exponential returns. This is kind of game changing for Shanta. So for every year of mine life that we can add to the mine, by drilling, we add, call it 45 million pounds of cash flow. We add a year, we add 80,000 ounces into our mine plan. We extend our life by another year. We add 45 million pounds of cash flow. Right, easier said than done. So in April, we started drilling again for the first time in, I think, 2 years. We drilled 8,000 meters, so 8 kilometers of holes. Very precise. I mean, this isn't, you don't just put the holes down. There's a lot of science and preparation behind this. And then we came up with an independent reserve. So we've added 135,000 ounces to our mine plan, which is a better part of about a year and a half to our mine plan. We announced that last Monday, in fact. And then we said, and that cost us $1 million. So for $1 million, we've added basically a year and a half of mine life. We had a downgrade at one of our underground mines. It was under-drilled in 2016, so we fixed that. So net, we were up about 91,000 ounces. So call it a year of mine life. I think the share price went down that day. I mean, it was just incredible. It was completely ignored. Anyway, so we said we're continuing to drill in Q4. So we're doing another 4,000 meters this quarter. And then next year, plans are for another 12,000 meters. So, this isn't very expensive relative to the amount of cash that we generate. And what we've said in last week, we said the results so far on drilling in Q4 are very encouraging. And we'll be putting out an update before Christmas. So, we're happy with what we're seeing. It's very steady, and we're seeing results. So the predictability is what's important. We think where we drill, where we want to drill, is where we're actually getting the results. This isn't a lottery, it's a science. So that's good news, because again, every year of mine life we add is effectively almost the equivalent of our market cap. Now, the second point here, the government owes us $27 million of VAT that has been unrefunded for the better part of 2.5 years. And I think the market's given up on it. Everyone I talk to say you're never going to get that back. Operate in Africa, no way. Well, the good news, on November 4th, we announced 1.4 million, so 5% of it came back. And I can say this with very high confidence, that I believe there will be more coming back in the next few weeks, and we'll put an update out in January. Now, that is a game changer. That's 30% of our market cap is in this VAT receivable. Everyone says it's a zero. I completely disagree with it. Now, I was in the country last week, and I'll repeat, I'm confident we're going to get more back. And then we have, obviously, the lever to offset it against corporate taxes. We have a very good relationship with the government. I see the mining minister probably monthly. We invest a lot in our communities. We employ effectively all Tanzanians, and we pay roughly, between taxes, royalties, and PAYE, about $20 million to the Tanzanian government every year. So there is a bit of a give and take, and they like what we're doing. The government likes what we're doing. They want us there, and I'm confident we're going to get more VAT back. But we'll have to wait and see. And then obviously the third prong to the value arguments here is Singida, so our second asset. It would increase production by about 30%. And we've said we will not fund that at the Shanta Gold level. Our shareholders will not be on the hook for that money. So it either gets funded at the asset level, so we sell down part of the asset, or it doesn't get funded at all. But there won't be any dilution for Shanta Gold shareholders. Now, I'll just dive quickly into the exploration. This is 30 square kilometers. This is our kind of the bulk of the value of Shanta Gold. Our processing plant is in the middle. And then you see here in circles, these are new targets, so kind of 2-3 kilometers from the plant. That plant is the one that's on the front page of the presentation. So these are new targets that didn't exist 12 months ago. We've been drilling them, and we've been adding new ounces. So Bohemia Creek North, the second one there, is 18,000 ounces, which you see here is the top left-hand circle. We're just getting going on that one. It didn't exist 12 months ago. We've been drilling there, and I believe we'll be adding more ounces to that soon. Here we are. This is the operating environment. This is what I've said all along. There's a dispute between Acacia, which you may have read about on. This is a big London-listed company, $1 billion company. It was finally resolved. So Barrick Gold, the second largest gold company in the world, took them out of their misery in September. Took them private. In October, there was an announcement between Barrick and the government to resolve all of their tax disputes. Good news. And then, as I said, that was the catalyst. Literally on the first business day of November, we got our first VAT refund. And the Revenue Authority tells us there will be more in installments. So again, I'm confident we're going to get more. The operating environment in country is improving. And Tanzania did go through a rocky patch for 2 years, but I can report that things are improving. And then here, this is our second project, again in Tanzania, separate from our existing project. It's called Singida. It would increase production by about 30%. Overall, pretty good business case. it will be funded at the asset level, so no dilution for Shanta Gold shareholders. We're done with raising equity. 2 more slides here just to recap what our priorities are. Again, we're going to deliver production 80,000 to 84,000 ounces of production at a kind of $700 margin, so very attractive, high-grade, low-cost asset. Exploration is by far our biggest value driver. Again, every year of mine life we add nearly one time of our market cap. Deleveraging will be net cash in 2020, and then we have these value levers that we're going to try and unlock, VAT being probably the biggest one, which is most tangible, 30% of our market cap. And then again, this is what to expect over the next 8 weeks in terms of news flow that you can expect to see. So we'll put up another update before Christmas on our drilling. So we've already said we're encouraged by the results we've seen. We're 9 weeks into the fourth quarter. And then third week of January, we'll give an update on VAT, on the balance sheet, and then how the production ended for the year. So we're well on our way to meeting our production guidance of 80,000 to 84,000 ounces. I don't have any concerns over that. So overall, things are going well, and again, I think Shanta is just one of these small gold companies that generates a lot of cash, and it's just a bit overlooked by the market, but very, very exciting. So thank you very much for listening.
Thank you.
Can you say a little bit about whether you're attracting attention from the government with respect to royalties?
Yeah, so good question. The royalties are governed at the national level, and they're applied uniformly across all precious metal companies. So the current royalty rate is 6% in country. So it was increased 2 years ago to 6%, and then there's another 1% clearance fee, so it's 7%. So about for every ounce of gold we deliver, we pay about $100 per ounce in royalties. It's nearly it's about $9 million a year to the government. That is very high on a kind of global basis if you benchmark royalties at 7% for precious metal companies, and it's stable. I mean, it's been stable now for 2.5 years. I wouldn't expect it to increase. It's a manageable level for us. We've learned to live with it.
Could you just say something about the mine life of, I can't pronounce it, New Luika?
New Luika, yes.
Luika, apologies.
So the mine life currently has to stand on reserves. So these are the probable reserves at a 90% confidence level, are through to 2024. So we've just increased that. I think it was roughly kind of in the 2022 range. And so the only way to increase mine life and add reserves is to drill. There's no other way to do it because of statistics. Now on top of that, we have another 700,000 ounces of resources. So, not all of those will get into the mine life, but I suspect some of them will be converted. And then, of course, we have a huge regional footprint, roughly the size of inside the M25, that we control and needs more exploration. But it's not uncommon. I mean, what we do is we drill from underground because, at the moment we're about 350 meters underground. And it's very expensive to drill from surface, and it's very imprecise. So what we do is we as we progress down underground, we create these cuddies, and then you drill 120-meter holes from underground. So it's quite common for underground mining to have roughly 5 years of visibility in front of you, knowing that there's absolutely no reason why the resource doesn't continue at depth. I could pull up a side profile of our mine, and it literally follows these two faults. I would be surprised if it cut off, but of course it can. So, yeah.
Thank you.
Do you expect to be a 100,000 ounce producer in the next few years?
Yeah, the likely only way to get to 100,000 ounces is through adding Singida, our second project, or by having a very significant increase in the resources so that we can expand the plant. What I would say is we generate a lot of free cash at our current state, and we would think very hard before we start allocating more money to capital expansion. I think shareholders, the report we get from our shareholders is they're just tired of it. get on with start generating free cash and starting to either give it back to shareholders or get off of that allergy to debt.
On that, Eric, if I may, if you get this VAT refund or some part of it, the market's not expecting it, they've discounted it as an eventuality, what would you do with the money?
Yeah, it's a great question. So at the last two board meetings, so we meet quarterly, dividends are on every board topic on the agenda. And we will extinguish the debt before we kind of start returning capital. But that is the obvious route, is to pay out to pay out a dividend. I'm not making any promises, don't get me wrong. I'll give you an example here. So in any 12-month period over the last 12 months, we repaid about, I think it was $17 million of debt, repaid. And if we paid a $17 million dividend, once the debt's gone, I think the yield would be something like 20%. I mean, it's mind-blowing to think that there's that much cash that will start to accumulate. But we're still 6 months away from that.
Lovely. Eric, we're out of time. Thank you very much indeed.
Thanks
Thank you
very
for coming
much.
this evening.